right. Good afternoon, ladies and gentlemen. Thank you for joining us. Money Show is delighted to welcome Ryan Wilday, analyst with cryptocurrency trading service on ElliottWaveTrader.net. Mr. Wilday has over 17 years experience trading equities, futures, and options. He began trading cryptocurrencies in 2013, and today he melds his deep knowledge of the cryptocurrency market with Elliott Wave theory. In August 2017, Mr. Wilday launched his cryptocurrency trading service on ElliottWaveTrader.net. Ryan, thank you so much for joining us. The floor is yours.
Thank you. Hey everyone. I think a lot of you have probably seen my presentations in the past. We're going to shift gears here. I'll talk quickly about Bitcoin and my roadmap for the rest of this bull market, but we're going to dive into opportunities in crypto equities. How can you profit from the crypto bull market using your normal brokerage account? Of course, we've got the Bitcoin ETF trading a couple days ago, but there's a lot more ways to use your brokerage accounts to profit from this market. So if you're interested in getting this presentation, you can email us afterwards at elliottwavetrader.net, and you can also snap this QR code. I'll leave this up for about 5 seconds. When we go back to Q&A, if you weren't able to get it, I'll head us back to this slide. So you can take a few seconds to snap this with your camera if you wish to get a copy, or just email us there. And again, I'll get back to this when we get to Q&A. Again, Jessica introduced me nicely, so I won't belabor that, but I've been in this market a bit. I run two services, one ElliottWaveTrader.net, and then also a sister service on Seeking Alpha. It melds the Elliott Wave theory, which I'll talk about very briefly, with also some quant signals that I've developed using machine learning. And I've been doing this for a while, since 2012. I'm not going to belabor all of my calls, but I've had some very excellent history of calls with Bitcoin and other coins, but focus here on Bitcoin. I won't read them to you, but I do want to point out that the last one that I am just waiting for is my prediction that we would hit $100,000. And I started releasing those predictions in 2019, and I think we finally have got the setup to get there. I don't know if we'll see it by end of the year, but we should see it. I would sure in the next 12 months, if I'm sure less actually, but we'll see how that goes. Just quick disclaimer, I won't read this, but I'm not suggesting that you trade any of these equities, cryptos and crypto related equities tend to be extremely volatile. So you really got to do your research. You've also just kind of have the emotional and financial situation that allows you to bear with that volatility, which is a gift to me as a trader, but to some folks, it's a tough one to swallow. So do your own research. Just real quick, anything I talk about price forecast, I'm not going to explain the deep dive means by which I arrived at it. We just don't have that time in this, but I basically use the Elliott Wave theory, which suggests that markets move in 5 wave trends. And that, so if you look at this, even the 1, 3, and 5 of that trend also breaks down in subwaves. So it's kind of a fractal system. Each wave breaks down to its own fractal, and then corrections happen in 3 waves. But what's more important about this, which I don't reveal in this slide, but each of these waves tend to have a mathematical relationship one to the other. So what I can do with these patterns when I've got the pattern down is I can calculate where support and resistance are, where market's likely to turn, both where turn after a correction so that you want to lay in your buy orders, at the same time take profit when targets are hit. So extremely useful. It doesn't mean I'm always right. There's sometimes these waves are hard to read, but when we've got it down, we've got it down, and that's what's allowed me to make some of the great calls we've made over time. It sounds like voodoo magic, to be honest, and if you're a very visual person, you just take a look at markets and trends, you'll see the 5-wave pattern if you're a visual like I am. So I'm gonna give, so this presentation really is gonna be this quick overview of equities. I'm only gonna highlight a few charts because we really just don't have the time, but I wanna show you the categories we've got. One is talk about funds with crypto as underlying. I mean, of course, the ETF falls into that, basically a fund that holds crypto within it, and thereby the price action is very much tied to the crypto that it contains. Second category is Bitcoin miners, very, very important category in this space. Those are the miners that are basically crunching the transactions. I think within this miner category, you probably find some miners of other coins, but my focus here is Bitcoin miners. Exchanges and liquidity providers, those are basically firms that are involved in the trading of the assets. Got a couple to talk about. We've got consulting service technology firms, very brief category. and then finally companies with crypto exposure. I just briefly, before we get into technical analysis of each of these, I want to talk about fundamentals really quick. I mean, obviously funds with crypto underlying, they're holding the crypto themselves, so very much tied to the price action of crypto. So in terms of expectations of appreciation, it's really, of course, going to be tied to whether cryptos are in a bull or bear cycle. We're in a very strong bull cycle right now. Comment about Bitcoin miners. I'm going to be really honest about these assets, these stocks. You don't want to hold them in a bear market. I have been through a couple cycles in crypto, or probably more than a couple now. And Bitcoin miners tend to go really bad in terms of balance sheet condition in bear markets. You don't want to hold them long term. You really want to only hold them for the duration of the Bitcoin bull market. And at the same time, they really are leveraged on that price, so they can be really great returns, really great option trading. But you just want to be aware when cryptos have turned into a bearish cycle. And if you're not aware, you can really lose your shirt. I mean, the balance sheets tend to go really upside down very quickly. It's a very difficult business, which I can go into the ins and outs of why it's difficult. We may see some companies mature and be able to create basically hedging when they're in bear markets and whatnot, and just learn how to run their business a bit better. But overall, I'm not impressed with that side of the business. I am impressed with the gain to get out of them when you're in a bull market. So that's really important. Exchanges and liquidity providers. I think the fundamentals of these companies is really promising, but they sort of work on a very different situation than Bitcoin miners. Bitcoin miners are very much tied to the asset appreciation. These guys are really tied to adoption. So as the Bitcoin bull has moved on, lots and lots of new people, I mean, maybe you are in that situation, are coming into the crypto market and they need services. So they go to companies like this. That means that at any given day when Bitcoin, say, goes up and down 10%, which is a really normal day in Bitcoin, these stocks don't do much. I mean, they don't care about those small movements, but they really care about that long adoption curve. So we've seen nice appreciation in these over this bull market. That also means that if they run their business well, once you join a financial service company as a user, you don't tend to just walk away, right? You tend to have some assets with that company. So that means these companies can kind of survive the bear cycle, and kind of move along, and we should see big appreciation during bull cycles, and we shouldn't see their balance sheet go upside down like miners in the bear cycle. So I think this is a really nice area. We have very limited stocks in this area, but this is an area to watch. Consulting services and technology firms. I know I have a lot more on my watch list. I've only got a couple, but these are these companies that sort of serve the whole space. A really big one is the fiat gateways, which the chart I focus is one of those companies. Some of them are developing, it is consulting for institutions and whatnot. So I have just a couple to share with you, but this is an area to watch as well. And then finally, companies with crypto exposure. I'm going to show you MicroStrategy, which holds a giant amount of Bitcoin. I can't even remember how many Bitcoin they've got on their balance sheet. So their stock is starting to move as if it is a Bitcoin fund. But you've got other companies like Square that holds, I think it was 3% of their treasury balance in Bitcoin. PayPal, who's got a crypto business and so has a substantial amount of exposure to crypto. PayPal is almost an exchange. Even Square with their Cash App is almost an exchange, but they sort of fall into largely a business and payments, not so much in crypto. So, but they've got a substantial amount of operational and balance sheet exposure. All right, so we'll jump in. But first, I want to just give you the roadmap for the crypto bull market. If you've seen my talks, this chart should look familiar to you. I generally share it, and it's been very stable in terms of targets. And I've shared in the past that I expect Bitcoin to climb to 88K. I think I've said 114K, 115K, kind of splitting hairs, but we still are on track to that target. In fact, we broke the all-time high yesterday. We've fallen back since, but we are on approach to achieve that six-figure. I mean, we might fall just slightly under it. But my ideal projection, actually based on the micro count, which is not shown here, is actually closer to 105. So we should reach that yellow box, which is that range that I'm talking about. That will not be the end of the bull market. We still have this large wave forward to come. So we've got a correction to enjoy afterwards. I enjoy corrections because I get to buy more after taking profit. And then finally, we should reach the 125 to 150K. In fact, I'm starting to see reason in this market that we may push to 170K to 200K. What will happen is once we reach the top in this third wave, I will probably retarget that. Well, I will retarget or check my targets in that area. And I've already got the inkling that they are going to get pushed higher. So really beautiful bull market. I mean, we started this bull cycle off of 3,000. So incredible price appreciation. It's been a dream. I mean, not as nice as 2017, but very nice return. And it's not done yet, but it certainly has seen, it's certainly mature. We can say that. So real quick, funds with crypto underlying. I mean, classically, the big player in the United States has been the Grayscale Trust. You can see most people are familiar with the GBTC, which is a symbol for the Bitcoin trust fund. We've got, I really only, the only ones on this list that I trade actively, largely GBTC and a little bit on ETHE, which is Ether underlying. I misspelled. I should have said Ether, not ETHE. Obviously, you can't be an underlying of yourself. Anyway, but we've seen some competitors come out. We've got the BITW, which is large cap fund. I forget the name of the company. And then we have the Osprey Bitcoin Fund, which is OBTC. A couple comments. We've got this new, you can see it's missing the new Bitcoin ETF that launched a couple days ago. I just need to see the behavior of it. One comment I want to say about that in general is that new Bitcoin ETF is based on the futures pricing. I don't know if you're familiar with how futures work, but every month that fund is going to have to roll Bitcoin futures. They tend to be in contango, which means the next month is higher priced. So if you are investing in that Bitcoin ETF long term, you are experiencing what's called roll decay when those futures are rolled. It looks like it's going to be a drag of about 5% per year. I've seen some people say 10%, some people say 5%. Done calculations myself, and I can expect about at least $1,200 per Bitcoin inside the fund over the course of a year. That's not 5% at today's pricing. So it's going to vary. That's problematic. Honestly, I'll be frank, I would rather own GBTC, which right now is selling at a big discount to the Bitcoin that's contained. I think it's the other day it was 20%. If they are ever able to convert that to an ETF, which is on their stated plans, that premium will get wiped off and it'll go to par, which is an instant, overnight, whatever that return is at the time. It could be 16%, 20%, something like that, depending on the premium is when that happens. I don't think it'll happen this year, but anyway, my point is I'm more comfortable holding GBTC versus the futures ETF. But I'm also an options trader, and the options started trading today, so I'll be in those options every once in a while. All right, so that's that. Just real quick, give you a chart of GBTC. Should be very familiar after seeing the Bitcoin chart. We are rising in the third wave. That I've got 88 to 114 as a target for the third wave, and ultimately this should reach $150 to $170 in this bull cycle. That's really nice with a price of 50. I mean, that should get us about a 200% return from here. But we'll get some pullbacks in between, especially that big fourth wave down into the channel that I've got there. Next one is Bitcoin miners. We've got Huts mining, Hive mining, Marathon mining. Those are really the top three in terms of my trading. Riot, not a great company in terms of overall financial condition, but is actually interesting from a risk to reward standpoint. Probably a very good stock. So I think holding some of it's warranted. I definitely own some. I think, I own everything on this sheet, just disclosure, except for the Bitcoin mining ETFs, rigs and Sato, which I haven't actually evaluated yet. So just fair disclosure, I'm in all these. I would call Bit mining, BTCM, and Sphere 3D very speculative in terms of the overall chart quality and size of the companies. For the sake of a chart, we'll visit Marathon Mining, which I think is a great one right now because it's moving really fast and at the same time is got a bit to go. It's as I took the snapshot last night, it's at 53. I think it's down a little bit today, but I expect a climb to 100, 150 region over the next. We should get up into 95 roughly this year, but we should get a pullback in that B, which corresponds to the 4 in Bitcoin, and then finally get a rise next year into the $100 to $150 region. Okay, I'm kind of flying through these. If you want me to stop, look at one of these charts and come back to it at Q&A, no problem. So exchanges and liquidity providers. So of course, everyone should be familiar with Coinbase. That was the big IPO this year. In general, I don't suggest buying Coinbase, post IPO stocks. They tend to very much depreciate after IPO, and that certainly has been true in Coin. It's bounced recently and climbed back up, but we don't think it's set up bullishly quite yet. But it's been declining since the IPO, and eventually it'll be a great stock. It's a great company. Not just for retailers, but also for the institutional business. Just time, we need to wait on the stock and let it find its behavior, basically, from a technical standpoint. Voyager Digital is a great one, and this is actually the app that I tend to use for on-the-go movement of fiat into the crypto space. I mean, it's basically an app on the phone. They don't have a website that you can use for investing, and it's had a giant move in user base. I've met the CEO. I think they're a great company. They chose to list on their American company. They chose to list on the Toronto Exchange, so BOYG.TO. But you can get them in the US OTC at BYGVF. I cover both symbols in terms of my service. This one we are suggesting accumulation. In fact, there is talk that it will move from the US OTC to the NASDAQ, so that will be really nice. That would get a bit more fluid and liquid. I personally traded on the Toronto directly, just easier and more liquid. At any rate, it's a great company. I'll show you the chart for that one. Galaxy Digital is another one. This is an institutionally focused business. It was formed by Mike Novogratz. You might know the name. I think he was ex-Goldman Sachs or Bear Stearns. I can't remember the firm. But he formed this company to serve institutional clients in the crypto space. Some of you may be familiar with some of my past talks where I talk about institutional business in crypto, and I talked about their balance sheet and how much crypto they hold over the last 6 quarters. You may have seen that chart. At any rate, they've been a leader in this business, and it's a great chart. So I'd suggest buying that. I don't have a chart of that one just for simplicity of this presentation, but I'm going to show you Voyager. So Voyager, if you look at this, I had to use a different program to pull this chart, so it might be a tad bit blurry, but you can see the 1 and the 2 way down here. A very strong third wave, but right now we've been consolidating in this downtrend, but that really is considered the 4th wave as long as we're over 486. This is very typical. I typically have blue boxes where we want to enter. So all in my service, this is the way I lay out all the charts. If you want to enter stock, look for the blue boxes, and if you want to take targets, look for the yellow boxes. So we're in accumulation in this chart. In fact, if all the charts I've showed you, I think this one has the biggest opportunity. And the target up here is $100. This is in Canadian dollars, so you do have to translate to US dollars, but it's very similar risk to reward if you're looking at the US dollar chart, which again is BYGVF. Accumulate into 790 Canadian. It could go as low as 46. Doesn't look like it will, and then take profit in the $99 region when we get there. So beautiful, beautiful chart. And I want to be real clear that if we break 486, it may be bearish indication, but we don't expect that at the moment. But it does happen at times. Consulting, service, and technology firms, probably the least developed area of my presentation because I'm still trying to follow what companies are getting in the space. But I really like Silvergate Capital, SI, which is a chart I'll show you. DMG Blockchain Solutions is another one that I'm watching. And then finally, DeFi Technologies, DEF. TF is the US OTC. It trades on the Canadian NEO exchange, and I can't get direct access to it, so I personally have a bit of shares of DEF, TF, though I kind of watch how much OTC. They tend to be less liquid. Kind of watch how much OTC shares I buy because tough to get in and out of if you need to. Silvergate Capital. I've actually owned this stock since it was 14. It's now 148. So I've got a 900% return. Pretty darn good. Not done yet. We are in, if you look at this 4 down here and 5 up here, we are in the last throes of this stock. It's a bit choppy up here, but we do expect this move by the end of the year to reach to 200. That isn't much return. I want to back up. What does this company do? This company is technically a bank, but they actually run a lot of the fiat gateway access to multiple exchanges, like maybe familiar with Binance. They run the fiat exchange. So if you want to put take some money out of your bank account and send it to the crypto exchange. These guys run that for Binance as an example, and they do a lot of other exchanges. So as the whole entire space grows, these guys grow in business. They also have an OTC trading desk for institutions. So they're directly in the trading of, much like Galaxy, they're in that similar business. And anyway, so they're growing over time. They just have a general banking business as well. Anyway, so we should see 230 by end of the year. And then provided we hold, this support area for 2 fluctuates depending on where 1 tops, but if provided we hold this 2, then we should get a launch up to 1,000 region. I think that would be actually, I've compressed this chart in time, so I think it'll be, most of my charts don't reflect time at all, but I think it may be much more than a year before it gets to 1,000, but still could be a very good one to accumulate over a period of time. And finally, companies exposed to crypto. Again, MicroStrategy, these guys, I think like half their market cap is basically in, I used to know this by heart, but basically in Bitcoin. I mean, we can't go a month without Michael Saylor, the CEO, announcing another purchase of Bitcoin. I mean, he's pretty visionary in terms of using Bitcoin to fight off inflation. The warning I'll say about MicroStrategy is their business has been in decline. They're basically, they've been in the data consulting business, software business, and they're a bit behind on technology, and so they've been in decline business-wise over many years. However, they've had some really great financing of their Bitcoin purchases, and it's really played out strategically. So it's kind of best to treat them as a Bitcoin fund with an internal cash flow, and that internal cash flow is from their data business. So it's kind of an interesting play. In fact, it was I think it was Morgan Stanley that recommended clients, if they wanted to have exposure to Bitcoin, they use this stock. That's probably the case before the ETF came out, but this is what they were suggesting to clients. So it's pretty interesting. I've owned the stock for a while. Square has, I think last I checked, it was 3% of their balance sheet in Bitcoin. They also have the Cash App. They have the Cash App. It's an app and basically allows you to buy crypto, so they have exposure that way. And just Jack Dorsey is a general fan of crypto, and they've enabled crypto tipping on Twitter and whatnot. So it's just a kind of part of the crypto family. Tesla, they've been in and out of Bitcoin on their balance sheet, and then PayPal. That's I don't think they've put any on their balance sheet per se, but they have lots of exposure as they've opened up the PayPal business, payments business to crypto. And I'm going to share MicroStrategy with you. Eventually, I've got a target of 1,800 to 2,300. Right now, the stock is at 758. It should be accelerating. I haven't checked today's action. We may have a lower circle 2. You can see the blue support box for circle 2. So I would call that circle 2 quite a shallow pullback. So we may be that we've got to pull back today because crypto's kind of taking it on the chin today off the check. But at any rate, we expect acceleration in this third wave as it moves up into the 1330 region. 1330 region here, and then we should get a 4th and 5th, which should finally pull it up into the 1800 to 2300 region. So anyway, I've given you that's been a very quick overview in this 30 minutes about the crypto equity space, the different categories. I gave you a bit of a rundown on how I think of the fundamentals from a brief perspective, and I would really take it especially seriously when it comes to miners. Just don't hold them past the bull market, ending of this bull market. And hopefully if you don't join my service, hopefully you've got a sense of when this market ends. But I'm happy to have you join and help you with that. You can actually use this link if you like for a free trial. We don't take credit cards, so you can just let it lapse if it's not for you. I mean, it very much is. I do a report once a day for Bitcoin and Ether, as well as GBTC. If you're more of a short-term trader, you really want that nightly report. And then I do a weekly webinar on Saturdays where I review all the long-term charts as well as a lot of short-term charts. Probably about 50 cryptos get covered on the webinar. And then lots of intraday posting when I see trade opportunities and whatnot. So do take a look if it's interesting you. Again, we don't take credit cards, so there's no hounding or worrying about getting a bill later or whatnot, unless you actually pony up and do want to sign up. You can follow me on Twitter as well. I do posts. I try to do something I call Sunday setups. So on Sunday, I try to post a chart that I like in terms of if it looks actionable, in the immediate, I try to post it. And I think that is it. So we can take questions. I'll swing us back up to the QR if you want to get a copy of this presentation.
Perfect. That's great, Ryan, because there are people in the chat asking how to get the slides. They might have come in after you showed the slides. So like you said, you just scan their QR code and get your slides. So
Yeah.
We'll jump right into Q&A. Fantastic presentation, by the way.
Thank you.
Of course, Richard asks, what is your opinion relative to the SEC versus cryptocurrencies and regulation, et cetera?
Actually, we've got a presentation. There's probably a great presentation I did on that somewhere on the Money Show YouTube channel. That is one of my presentations I've done. I think Gensler is a pain in the butt, the new the new SEC guy. I mean, he's friendly to Bitcoin, which is great. So, I mean, I think Bitcoin's in a good spot. I think he's friendly to Ethereum, maybe mainly because he's too late. The Ethereum has been judged by the SEC as a commodity, and so it falls under the purview of the CFTC, the Commodities Futures Trade Commission. But all other cryptos, I think, are in the crosshairs of the SEC for sure. And kind of what Gensler has said is that if we can find a person behind it, we will go after that person. So it really is only an act of Congress and the courts to stop this guy. And I'm pretty serious the guy needs to be stopped because he's going to cut down on innovation and whatnot. But hey, we'll see what happens. Yeah, he's but at least in regards to Bitcoin and Ethereum, I think we're in a good spot.
Okay, great. Barry says he prefers OBTC to GBTC due to 2% premium. What are your thoughts?
It has been less liquid. For me, premium is kind of beside the point. For me, it's reading the chart because I'll trade in and out based on chart movements. And if I can get a good read on the chart, and it's from that regard, I prefer more liquid chart. So again, it kind of depends on what kind of trader you are. If you're more a long-term investor, I mean, for a lot of people, certainly the negative 16% for GBTC is a bit disconcerting. I understand that. But everyone has their reasons for being in something or not in something. So not going to criticize. Yeah, just have a difference of approach, I guess.
Sorry, Mike asks, what is your corrective target for Bitcoin this year, if any?
Corrective target, meaning right now my target is 105 is the most precise target. After that, we could drop back to 40 to 50 quite easily, even as low as 30. Okay.
All right, Jack asks, now that crypto ETFs are beginning to roll out, why does the gap between BTC and GBTC continue to widen?
Well, there's no reason for it to close. Basically, I mean, why did that premium form? For one thing, it happened because you cannot basically redeem your shares for Bitcoin. But what was happening on the sell side was that institutions were taking their Bitcoin to Grayscale, getting the shares at a par, and then selling them on the market after 6-month lockout to the market. And basically what that allowed them to do was to arbitrage, so short Bitcoin spot and then long the shares at par and then sell them at a premium after the lockout. So that was a big game for a long time, and that's what brought down the premium. Right now, I don't think there's any reason for it to go up. It'll be interesting personally. For me personally, I'm going to be looking at arbitrage opportunities between the futures ETF and GBTC. Again, honestly, I would rather be long something that doesn't have built-in decay, like the new ETF. I mean, it's a pretty bad product for retailers, to be frank. Why the SEC would allow a futures ETF versus a spot ETF is beyond me, and they are not thinking about the retailer, because the retailer doesn't understand that roll decay. I mean, most people don't. So anyway, I'm going to be looking at arbitrage opportunities. Why it's hanging around at 16-20%? I just think there's no reason for the market to take it back up yet. And as soon as it's converted to an ETF, it'll go right there. So that's another opportunity.
All right. Kitty asks, what do you recommend for investing through an IRA?
Well, I have set up I've used Kingdom Choice. There's other ways of doing it. I've set up a legal situation where I can, because you can do this, a self-directed IRA that allows you to invest in crypto. So I buy coins. But in regards to a normal IRA, and you don't want to set up a legal situation, everything on this presentation actually is just, again, you want to look at I gave the kind of fundamental perspective on each category, and you just want to mind that. Like you don't want to set a Bitcoin miner in your IRA forever. You want to be able to get out of it when it tops. That I would say, investing in a company like Voyager or Galaxy could be more of a long-term affair. as long as the chart stays in good condition. So.
All right, we will wrap up with one last question from Lance. He asks, what makes MARA better than RIOT in your opinion?
It's just the balance sheet. So MARA, they have been less diluted, and it's been a long time since I looked at the balance sheet. So sorry, there may be information that it's just dated. But as Riot was going into the bottom of the bear market, it was, from my perspective, looking at the balance sheet, nearly at bankrupt. And since then has kind of climbed out of that, of course, because Bitcoin prices have gone through the roof. But they've had to do a ton of dilution share-wise to buy their equipment, their mining equipment. I mean, one thing about mining equipment is that it very much depreciates. Basically the network difficulty climbs, the equipment gets basically obsoleted by the network difficulty, then you've got to buy new ones. I mean, it's kind of a tough business, and Riot, to keep up with that, has had to dilute shares a lot. All of these guys have, but Riot has been quite bad, and they're what they've got in terms of mining power is really not what, in compared to the dilution, is not what we have in players like Hut. Especially Hut is the best of the bunch. Marathon is up there, but not quite as good as Hut. So it's kind of the basics.
All right, fantastic. You had a great audience. You're a great presenter. It was a pleasure to moderate you today, and I'm thank you for joining us, Ryan.
Yeah, thank you.